So far, we have 10 participants who have joined this webinar. So today's webinar is on retail pitfalls that you need to avoid in business. Because most people enter retail because it seems an easy barrier to entry. It's very easy. It doesn't have more barriers, but it's a business model that needs discipline as well as proper management. So most people take lightly retail, but retail is very dangerous. It can burn your money, and you might go broke with retail. So I believe if I share my screen here, you can be able to see my screen. All right, I believe now you can see my screen as well. You can see my picture. Can you please confirm that you can see the screen that I'm sharing? All right, perfect. So just to introduce myself, my name is Wisdom. I'm an accountant and also I'm a digital trainer. I've been focusing on scaling small business owners, their businesses from 2019 up to this day. So I'm very passionate with working with small business owners to transition them from this survival mode up to running their businesses as businesses, because we need to differentiate what a business is like and also what is a side hustle like. So most people will run side hustles because if you would want to turn your side hustle to a business, you'd find that that business might not be sustainable because some businesses have a lot of requirements in terms of licensing and as well as taxes. Most people don't consider compliance cost as cost in business, but compliance is a significant cost that you need to consider on the get-go if you want to run a business. So today we are talking with retail business owners. So retail is more like fast-moving consumer goods. So FMCG means fast-moving consumer goods. That means you need to have stock before someone buys. That's the difference between a project or a service-based business. A project-based business, you are a panel beater. First of all, you need to look for a client that is a car that needs auto detailing or panel beating, and that customer you estimate on their cost of the job, then they buy their material or they pay a deposit, then you start to do the job, then they pay the final. So that's a different total business model than retail. Most people are into retail, but retail is a very dangerous model that you need to take care and also to consider the implications of retail. All right, so with more enforcements that are happening here in Zimbabwe through ZIMRA and other regulatory players like Council, EMA, and other regulatory authorities, you'd find that most retailers are now finding themselves that they are busy, but they are broke because they were considering uh, just buying and selling without having the license or operating as a business. But with that model, that means you were recording sales or profits that you thought were your profits, but were not your profits because you didn't consider other costs that are involved in operating in an economy that is civilized. So being formal is operating in a society that is order. Here in Zimbabwe, I believe that order is born somewhere in some different place, but now they are trying to bring it back for everyone to comply to certain rules that were set. You'd find that every institution these days is putting some pressure on citizens for them to comply. For people to wait on or to stop on stop signs, you find police officers on every stop sign, especially in Harare. You find every stop sign, you find that there are police that are hiding behind the stop sign. And if you just pass through a stop sign, you'd be fined. And also, we are noticing that if you have a car that doesn't have proper, uh, mm, let's say you have a cracked windscreen, you are going to be fined. Most of their fines are $15. But that $15 for 5 days, if you are traveling here in Harare, maybe from where I live, from Zimbabwe Park to Willowville, you'd reach Southerton for that day. They would fine you, and if tomorrow you might reach Rua, they will fine you as well. So you might find that you just need to adhere to that law of maintaining your windscreen, and you need to maintain your fire extinguishers and other things that you need to adhere to. So we are seeing that most of these institutions are trying to bring order into the country, as well as Zimra, which has been doing more rounds than any other institution. So, as we are focusing on this topic on retail FMCG, what pitfalls to avoid, I'll walk you through the pitfalls that you need to avoid if you are into retail, right? So let me start with pitfall number one. All right. So the common problems that are into retail is that you'd find that you are most busy on your every day. You'll be busy in retail. You'd find that there's this temptation to feel like you're busy or you are stocking up for your business, but you'll be broke. Because in retail, that, as I said earlier on, is that you need to stock up before customers buy. So the most temptation is that if you start your business, you'd find yourself that I need to stock up my shop so that whenever I'm making money, but it doesn't work like that. You need first to determine the capital that your shop uh, uh, needs uh, on a particular, maybe for you to stock up. And you need to define your buffer stock or your, what I call your common range or your best performing range of products. So common problems is that you'd find yourself busy, but you are broke. And also, when you are selling volumes, as I said, if you are busy, you would think that you are making profits, but you'll be hiding losses. So you'd get this false confidence that you are making money, but in actual fact, you'd not be making any money because most people in retail, they confuse turnover, that is your revenue, with profit. Have you ever seen that? If you look at your reports, you might find that you made a turnover of 1 million last year in 2025. But what do you have to show for it? You might find that you don't have anything to show for it. So retail is something that if you are not careful enough, you'd find that you get into the temptation of always scaling in thinking that you are uh, growing the business. But what you are doing, you are just being busy because you are dealing with thin margins. So retail has very thin margins. So that's common problem one or uh, on retail. So Number one pitfall. So I've seen this happen, whereby you start your business, you are selling something, you have your range of products that you are going to sell, these products or these 20 or 10 range of products. Then you have your customers who will be asking you to sell certain things that are not in your range. And because you have that excitement of starting a business, you get into a pitfall of stocking or buying stock on emotion. Let's say you are selling automotive uh, uh, things that are automotive related. Maybe you are into paint, and when you're into paint, someone say they need perfumes. Those perfumes to put on the mirror for your car. This is a product range that is not in line with what you sell in your range. But because most customers will be asking maybe for a dashboard spray when you're selling paint, yes, you might fall into the pitfall of buying that paint, that stock of dashboard spray, but you have bought on emotion. And in business, you don't have to do that. And it's a very common to do when you are into retail. Retail is a very dangerous business model to do if you are not very disciplined. So the first pitfall is to fall into the pitfall of buying on emotion. So you have your cash tied up. Maybe I'll give you an example. Maybe you stock up cash. Your stock needs 50,000 USD. Then you get to stock up 5,000 in slow moving stock because it's not part of your range. And that 5,000 takes 6 months or even a year to clear up. You'd find that you'd have wasted the capital that was tied in that 5,000. So don't buy stock on emotion. Then the another pitfall is to compete on price. This is very common. So you'll find that most people would try to compete on price. Yes, you have to be very competitive in terms of pricing, but that doesn't have to be your unique selling point. What makes someone come to your shop? That is very important than the price. Is it the customer service? Is this something they feel when they are in your shop? That is very important than on price. So sometimes if you start to price or to compete on price alone, you'd find that you might sacrifice margins. So when I'm saying margin, you need to consider how much are you selling or how much are you getting after you have sold the product that you are selling and you have deducted all the cost of sales. How much is being left to cover on the operational costs? So I love to deal with margins in cents. So margin is how much is left after you have sold and after you have bought your stock that you are selling. So let's say you're selling something for $1 and you have purchased it for 40 cents and what's being left is 60 cents. So every time you sell $1, that means your margin, the amount that is being left is 60 cents. So if you sell 60,000 or 70,000 or 100,000, that means you have 60,000 that is being left for you to operate. Now you consider how much does your operations take, like your operational expenses, your rental, your wage, your payroll and employment taxes, and other operational expenses that are involved in that. So most people, if they enter into the price competition phase, they will rather compete on markup. I'm adding 50%. Markup and margin, they are totally different things. Margin is what's being left. Markup is what you are adding on top. So it's better to work on a margin, then compare to what the market is providing. And if you can't match what the market is providing. It's rather you need to focus on what is your unique selling point. So that's number 2 on pitfalls on retail. Then you don't have a buffer stock. You need to systemize your stock tracking. Most people, they'll be in retail, but they are not systemizing their business. You find that they don't have a system. They just take the money and they give the product. If you're not systemizing your stock levels and your stock tracking, yeah, you'll be very busy for a very long time. And I assure you that you'll be very busy. You'd open the shop from 7 a.m. up to 9 p.m. and you'd not see the results. You'd just be busy. So focus on having the buffer stocks, and also you have buffer stocks when you systemize your business, then giving credit. I would rather, you are not a bank. If you enter into business whereby you are selling something to someone, just know that you are not a bank. You don't give out loans, because when you give a product on a credit, you have given a loan. But most of us, we start our business based on relationships. So sometimes you'd find that those relationships, let's say you are into a business that you always have repeat customers every day. Maybe you have a consumer, a business to entrepreneur business model, whereby you are dealing with entrepreneurs that are servicing the customers or the end users. You'll find yourself that the customer that is buying from you on a day-to-day basis, you develop a relationship with them. And obviously, sometimes they might come to you and say, today it's this customer said, I have this much deposit and I have to balance it this way, this way, this way. Can you give me this product on credit? So sometimes if you are operating that business model, you might find yourself giving out credits, but don't give out credits without a system. You need to have a system that tracks what has been paid and what has not been paid. And it has a dashboard. Whenever you want to log into that system, you'll find yourself seeing who is owing you and what you are owing. So you need that. That is another pitfall, and also what you need to do. So you need to have a system. Then pitfall number 5, confusing revenue and profit. So when you enter into a business, you enter into a business to make profit. You don't enter into a business to be a charity. That is, if you are a charity, if you are getting donations from your partners, from other people, and you are acting on charity. But if you enter into a business to make a profit, make sure that's number 1 of your priority. That means you need to know your numbers. You need to know what is your margin, what are your operating expenses, and you need to manage those things. And you need to know, and you need to understand that don't buy stock or don't scale on emotion. So adding a product range is another part of scaling that you might not even see it coming. You enter into a business saying, I deal with these items. I deal with bulbs. What I do is I import or I sell bulbs or this type of bulbs. Then someone is always asking, or two people are just asking about certain product lines that you don't have a market, or you didn't plan on a market to sell. And you'd find yourself that you'd stock up those things. You have scaled into another unit without considering profit. And it will tie up your capital, and you'd find yourself suffering. So don't scale or don't confuse turnover with profit, because you might be making 1 million, but making 1 million is not profit if your business model is tied up on a brick and mortar model. Then this one, it's a problem. It's a very big problem here, especially here in Zimbabwe, whereby most of our transactions are cash based. So you'd find yourself that you are mixing funds, your business funds with personal funds. These days, there are now tools that you can easily separate what is your business transactions and what's not yours. I would highly suggest you find tools like Google Sheets. I use Google Sheets to my clients as well to myself to separate business funds and your your personal funds. Because as you have personal funds, you'd find that you'd use your personal funds the way you deem necessary. But on business funds, you need to be very careful and treat it as a separate, respectable individual. Then in retail, you need to have a relationship with suppliers. So first of all, you develop relationships with being consistent. You should be known by consistency. You need to have a consistent buying pattern, paying suppliers on time, like on cash basis, especially if you're starting out. And if your supplier sees the consistency and that you purchase on a regular basis, they would rather have an account for you because you are putting their products on to the customer that buy the products. So they would rather have someone who has a store to put the products on the face of customers. But it needs space for you to have a relationship with them. But for you to have a relationship with them, that means you need a plan. You need to be very organized. You need to have a discipline. So that's number pitfall of in retail, neglecting supplier relations. Some people would uh, be able to bargain on suppliers relationships and negotiate credit terms, but however, they would neglect those supplier relationships whereby you have been given things on credit, but you don't honor up or communicate in time to your suppliers. So if you don't do that in retail, you'd find yourself that you'd find it very difficult to operate in retail. Then this one, doing everything yourself. So if you enter into business, don't be a perfectionist. What you think is doable by yourself, sometimes you don't have to do it by yourself. You need someone who assists you on that. You need someone to assist you on that. Because if you do things by yourself, you'd find that it would be very difficult to scale your business. Yes, you might think that these things were, were possible or were even better if they were done in this way by me. But that's not true because we have different energies, we have different skills. So whenever you employ people with skills, let them or allow them to do the things that even sometimes they are not comfortable or you are not comfortable for them to do without you. Just monitor them, just guide them. So delegate. That's number 848 in retail. Then number 9, not tracking shrinkage. So shrinkage or pilferage happens in several ways. So in retail, fast moving consumer goods, you need to track your first in and your first out. So sometimes you'd find that you are dealing with products that have expiry dates. You have bought noodles and you don't take consideration of the expiry date. You don't have a system. You'd find that someone, if they buy an expired product from you, they will never, especially if they discover that the taste has been different from the taste that they've been buying from a different shop, and they look at the container or the packaging, they see that the product that you have sold them is expired. You have tarnished your customer, and that customer, for them to come back to, especially now with social media, if they go on social media and say, this company or this shop sold me. Most people now have community groups. They might not go to Facebook, which is a higher audience, but that community group in your area, if they say, hey, I bought these yogurts from this kind of shop and they were expired, but they didn't even show up or even take note. I even saw them still selling the same expired products. So that's number one of shrinkage or pilferage. You need to track your shrinkage. So whenever you're buying your products, take care of the batch expiry dates. And you need to monitor that the first batch is the one that goes out before the new batch is that you have purchased, because obviously you are not waiting for the stock to dry up for you to buy another product. So shrinkage comes in different ways in retail. It comes from theft, from your employees, even from your customers, because some customers are not good customers and some employees are not good employees. So shrinkage or pilferage comes in various ways in retail. Even counting errors, you would find that counting errors would affect your business. But what I have realized is that those things that affect the customers the most are very dangerous, especially this simple thing of expiry dates. I remember on Facebook, on Daily Boat, there was this lady who said, I bought this yogurt and it was sour and stuff, something. Then Dairy Boat had to honor up on that. So you see the power of social media as well as shrinkage in business, because maybe they had not taken note of quality control. It was quality control. The products were not expired, but it was a matter of a batch that had not passed through quality control. So pitfall number 10, ignoring your numbers. So I believe when you start your business, the first excitement is to look at the top line, or we call it top line numbers. You focus on how much we sold today. We sold 5,000. Yes, the business model works. But you're not considering your operational expenses. What did it take for us to sell that 5,000 per day? How is our operational cost structured like? You need to take care or to consider these things early on in your business. Don't wait until you have, let's say, yeah, now I need to start making money. I've built my business. You build your business on the get-go. Start building your business as you go, on the get-go. So what do you need to do early when you start your business, especially retail? As I said, retail needs discipline, a lot of discipline, and a lot of attention to detail, and also a lot of knowledge, because sometimes you find yourself in situations that needs lawyers, because the products that you are selling, maybe you are now into conflict of interest with another retailer that is beside you who has licenses for that place, and you don't want to be in that situation. So what you do early is you need to know your numbers. As a business owner, you need to have knowledge of how these spreadsheet tools work, like Excel, Google Sheets. Have your model. If I'm selling this much, adjust on your range. If I'm making an average of 34 cents per dollar, if I sell 5,000 and my operational expenses are this much, how is it going to affect me on the profitability? Because I need to buy stock in advance, so I need more cash flow in my business before I start making profits. So my cash flow positive, I will be cash flow positive at this period. You need to consider those things early on. Then, number 2, what you need to do early, define and protect your core range. As I said, most people would be carried away with the customers that are asking, we want this, we want this, we want this. Protect your range. If you sell beetroot and avocados, stick to that until you have the capacity to add another product range. Don't be desperate to change your core range because 3 customers have asked about that core range. See, just research about the market. See if your numbers or your capital allows you to stock up another avocados or another range without affecting this range that are moving. So define and protect the core range. This is what you need to do in retail. Then price with margin in mind. Most people use markup. They don't use margin. What is it? What is being left after I have sold these things? So most people would say I'll add maybe 100%, but for some products, 100% markup is not enough because this product might be sold in 6 months and you'll be paying rent in those months. That's 6 months. So adding 100% markup might not be enough. And for some products, you need to add a markup maybe of 50%. But what is it being left? What is being left after you've sold that product? After you've considered the purchase cost of that product, that is the margin. Then you compare it to your operational expenses. Then, as I said, you need to build supplier relationship early, introduce yourself, communicate early. You need to be very charming in business. Then separate your money. This one is very critical. I've seen it. It has affected me for certain periods. In as much as I thought I knew about this, but it affected me as well. Then systemize. Understand your customer, who buys, that is if you have a system, when, and everything that relates to your customer behavior. Then also manage your cash flow. This one is a bit tricky on especially if you are in a period of growth, high growth, but also in retail, avoid over trading. There's this thought of saying my business is growing, so I need to add another truck or I need to buy this thing. So you might find yourself that you might enter into over trading without even seeing it coming. Then reinvest deliberately. As I said, don't invest into another core range without looking into what is more profitable to you. So you need to reinvest in profits, systems, as well as people. Because people, you have the 4 P's in business. That is your product, your people, your processes, as well as the place where you operate, the environment that you operate in. Then, before you upgrade your lifestyle, you need to consider reinvesting deliberately before you buy that GD6 and you don't pay the full duty, and Zimra will be facing who impound that car. Easily these days they are doing that. Mota wombezi kuti Paul Zimra mazo. Yango sifunza Honda Fit. But pakaipa. So then get the basics before scaling. So what most people do is that when you start your business, there's this temptation of saying, I am making 5,000 on this place. If I open another place and make the same 5,000, that means I have this much. But you have not stabilized this place that you are already operating. You don't know this shop, what is the economic order quantity? What is the stock that fills up the shop? And what is the amount that I need to keep in my business for this shop to keep running. So most people would just say, I need to open another location without stabilizing the first location. So to stabilize the first location, you need to get the basics right. You need to define your operations. You need to define your stock management. You need to define your sales processes. Everything has to be in order before you open. So I would rather say, whenever you start your business, you need to focus on sales. Make sure that you are into the process of selling. Once you establish your sales process, now you need to stabilize the business. How do you stabilize the business? You stabilize the business through processes, sales processes. How are operations done in your business? What are the day-to-day activities that needs to be done when the business is operating? So that is the basics. Know your daily numbers. These days, you need to have a system to look how much you have sold today, how much, how are you protecting your core range? How have you separated yourself from the business, right? That's so. This was my presentation for today. Uh, the free webinar on the pitfalls in the retail and what you need to do. I believe these things you already know them, but you just need someone like me who just keeps on reminding you what are the pitfalls like, and also maybe not to threaten you or to, but to give you guidance, because obviously you know what you need to do in your business, but you need someone to remind you. No, you don't walk it this way. You adjust it this way. Most people, some of you that have attended this webinar, some of you are doing this in your businesses, and you have just realized that I have done this and I've done this. And some of you are proud of what you have done, and some of you are now starting to feel the danger that is coming in. But there's still time, you can reorganize your business. If there is no time, yes, now you've learned what to run a business is like when you uh, you don't take things in a way they should be taken in sort of uh, in a way that needs to be done. So if you have not yet joined my other classes on the text basics, because in as much as for you to run a business, you need to run it sustainably. And for you to run a business sustainably, that means you need to adhere to the governing laws of the community that you operate in, a civilized society. And now with the new system that we've been implemented with ZIMRA, terms, FDMS, as well as the upgrades on ASCUDA, that means you now need to take seriously taxation. Most people were not considering compliance cost as a cost in business. But now, with the upgrades that have been done, we now need to consider compliance as something that needs to be adhered to. So my next class will be starting next week on 3 March, and I'll walk you through all these lessons on financial literacy in business, the digital tools that you will be working on a day-to-day, or you should be working on a day-to-day basis, and what system can you put in place for you to protect your business in terms of shrinkage or pilferage, and the tax basics that you need to adhere to, like payroll and employment taxes, income tax, VAT, capital gains tax. And you also get the templates on working with this tax type. So if you want to join the next class that is starting next week, register today. Just message us on WhatsApp, and my representative will assist you instantly. Then after this webinar, start with a daily cash book. Establish a Google Sheet. A Google Sheet is, you can design a Google Sheet that tracks what is come in as cash into your business and what is gone out as cash into your business. It's more like a bank statement, and where you have your running balances. Then identify your top 20 SKUs. So SKUs, that means your stock keeping units. That means All right, I see a message here. What is it saying? Some are still have a long way as far business is concerned. Thank you for this help. We definitely join the account. Thank you so much for that. Admin. I'm just saying admin. Thank you so much. So you don't have to be overwhelmed. We need to take things step by step. Start with the little things. But as you scale up, you'd find that you will not make some mistakes as some business owners have made, and they have been telling stories. Yes, um, uh, I didn't run. I didn't run retail shops, but I've worked with people closely, and I was part of them because the mistakes that we made, I was part of us making mistakes. We would thought previously we thought taxation we don't need to pay tax on other businesses, but now with what we are seeing and what I experienced, don't take taxes lightly, because if they need to come on your heart, muti munotanga kushandira pauri, muti munotanga usingashande, but kana ukatanga kushanda pauri, you'd feel the wrath of the law. So I would advise people to take the steps gradually, and don't walk into the steps. So sometimes we learn from our experiences, and sometimes we learn from other people's experiences. All right. So this was my webinar, and this is a question and time period up until 8:30. So I have a question here. So the question is reading: when setting prices, whether by margin or markup, how do you factor in taxes to remain profitable? So now there are different tax types. So in business, we have different tax types that we need to adhere to. We have what we call VAT. VAT is a consumption tax. It's paid by the end user, but it's a bit different now, because previously it was called sales tax. Sales tax, it was mainly paid by the end user. But now VAT, the difference between sales tax and VAT, VAT is mainly paid. VAT is value addition along the supply chain. So supply chain just means you have this distributor that is a VAT registered operator. Then you have other person that has bought those things to retail, and that person would sell to the end user. In all these stages, there will be value addition. That value addition comes with different types. Maybe you are operating in an environment whereby people, maybe you have a shop that is very beautiful, and you have designed the shop, and you are able to charge the price that are a bit higher. You have value added. That's the part of VAT. So VAT, you as a business, you collect it on behalf of the government and remit it to the government. Then we have another tax type that is called income tax. Income tax is the final tax that is paid on what you have made as profit or as taxable income. Then also we have what we call payroll and employment taxes. Whenever you employ someone, that someone that you have employed has to pay taxes. But since you open the business, you are employing them, you are the one who needs to collect on behalf of the government and remit that tax. So for you to do that, you need to have the skills, maybe those spreadsheet skills, as I mentioned, that you need to be able to determine, all right, if I'm selling this thing as $1 and my cost of sales is this much, my margin is this one. If I add VAT, will I need to increase my prices, or I need to absorb these costs? If you would want to, you can input those calculations into the mix. But we have all these lessons in our tax basics course. So we teach about profitability. we teach you about financial literacy. What is accounting and bookkeeping? And what are the processes that you need to take so that you get profitable and you are able to pay taxes? Because if you're not profitable, you certainly not be able to comply. That is very honest. And if you are operating a business and if they catch you, especially if these days if they catch you, they would deal with you. Zimra will deal with you very, very, very serious. In meat industry, so meat, beef previously was exempted, but Mr. Mtuli now he is saying there needs to be VAT. It's now a standard rated supply. But however, I've seen more butcheries because it's a basic product. There has been no high enforcement on butcheries. But the first tax that you need to adhere to is your income tax and your pay or employment taxes, then VAT, depending on what you are selling in your business. So some products are exempted, some products are zero rated, and other products are standard rated. So all these things, we have a topic that we say VAT mechanics. In this, so in this course, we have a topic of VAT mechanics. We explain all this as well as you receive an ebook whereby if you'd want to read more about tax, we have that in the ebook. Then income tax, the percentage of income tax is 25%. Then we have other 3% as aids levy. So to understand the mechanics of how this is calculated, it needs also another day to explain what income tax looks like and how it is calculated or computed and how you can do the returns in terms. So all these things, you'll be able to learn them in our upcoming course, that is the Tax Basics for Entrepreneurs course. So this was on the lesson on our free webinar on retail pitfalls that you need to avoid. We'll be carrying out with these free webinars as we go. We'll be choosing a topic that usually where we find most people lacking, and we'll be teaching about this on our free webinars up until June. So we are now closing our webinar. Thank you so much for these questions and also for everyone who has participated in this free webinar. I hope to see some of you and all of you in our upcoming cohort starting Tuesday. And you'd, for those that have missed or would want to review this lesson, you would receive a pre-recorded lesson that you are able to view after this webinar. Thank you so much, everyone. I really appreciate and I wish you the best in your endeavors. Thank you so much and have a good night.
Thank you so much.
Thank you. Thank you so much.